Do you like longing funny meme coins on 100x leverage? Well, then this video is not for you. However, if you like making stable money without any risk, then yeah, I guess this video is for you. Welcome back to the channel. I wanted to make a short video about basis trading, and the reason for that was the whole Luna USD drama and the markets in general. It just shows you that nothing in crypto is really safe, and I think that was a reality check for a lot of people, including me. Anyway, without wasting too much time, let's just go straight to the content and I'll show you guys what I'm basically doing all the time. Basis trading is a strategy which consists of the purchase of a particular financial asset and the sale of its related derivative. For example, the purchase of one Bitcoin and the sale of one Bitcoin perpetual contract. By buying spot and selling a perpetual contract in the same amount, you are creating a delta neutral position, meaning whether the price of Bitcoin goes up or down, you will always be making money on one side and losing money on the other. So you are essentially locking in a value. But then how do you make money with this? Well, this is where funding rates come into play. You cannot just open a perpetual contract for free. Depending on the price compared to spot, you will either have to pay to keep the contract open, or you'll be getting paid to have the contract open. Funding rates are the primary mechanism that keep the prices of a perpetual contract close to its spot variant. They do this by incentivizing traders to buy perpetual contracts when the price is low relative to the spot and sell when the price is high relative to the spot. If that sounds confusing, don't worry, I will use my insane drawing skills and explain it a bit better. Alright, so here we are in my amazing drawing program. Let me just see. So imagine this is the price of Bitcoin, yeah? Beautiful. Then the blue line will be the price of the perpetual contract. Blue and orange. And blue is the perpetual and orange is the spot. Let's say Bitcoin is 60K here and I don't know, 20K here. So right here at the 60K point, you can see that the perpetual is trading higher than the spot. So if you want to push the price down of the perpetual contract here at 60K, people who are long, they will have to pay an hourly rate to all the people who are going short here. And that way you are incentivizing people to go short at this point, basically pushing the price of the perpetual contract down back to the spot price. So you can see right here it crosses, and then eventually it even goes down, so here, right here at the 20K mark, it's trading below the spot price. And here it will be the other way around. So right here, if you are short in a contract, you would have to pay an hourly rate to all the people that are going long here. And essentially, if you go long at 20K, you will be getting paid an hourly rate in order to push the price back up to the spot price. And this basically keeps the perpetual contract in line with the spot price. So that is essentially how perpetual contracts work. So how does this work in practice? Well, to make it easy, I will literally open a position and, I'll just talk you through it. All right, so here we are on FTX Premiums. And this is a website. By the way, I'm doing this on FTX. I like using FTX and I know how they work with collateral. If you're using any other exchange, I don't know how they work with collateral. So this is really only meant for FTX. FTX Premiums is a website that basically aggregates all the funding data and lending data from the FTX exchange. And it's a very, very convenient website. I basically wake up every morning, I have my cup of coffee and I check this website. And right here, you can just see all the funding rates. You can sort by hour, in the past 24 hours. And I just scan and see what's kind of happening on the market. So for this example, I will find a coin that has a positive funding rate because I want to buy a spot position and then short a perp. So I'm going to sort by funding rate on the 24 hours. Now be aware that the market right now is completely crap. So a lot of fundings are negative, but I'm going to try and find a positive one. Okay, so GRT right here seems good. It's paying 30% APR to be short on this coin. It has a 90% collateral weight. I'll talk about that a little bit later. But for now, let's just hop into FTX and open a position. So I have a sub account here with $100 in it, and I'm gonna go to the GRT perpetual. I am then also going to get the USD market open next to it. So I have two screens right here, GRT, USD. Okay, so I'm gonna sell the perpetual contract and at the same time buy the spot market. Something to be aware of is fees, because if you use market orders, you will pay quite a high fee. So I prefer to use a limit order on one side, and once that fills, I will just use a market order on the other side. You don't want to wait too long after buying one side, because you're locking in a value. And if price moves against you, you are also locking in that small loss. And yes, that also means if price moves in your favor, you are locking in a small profit. But that is a whole different strategy, and I'm not going to go into that right now. Okay, so I'm going to sell the perpetual. I'll do like 750. It's around $100. And I will also buy spot on margin 750. So I'm going to click market order here. So this is all ready and ready to go. I'm going to place my limit order here for 750 at whatever this price. I'm going to hit buy. My limit order is right here on the charts. I'm going to move that up a little bit, see if it fills. All right, I'm almost filled. There we go. Now, because I just bought spot and that counts as collateral, I can now sell the perpetual right here. I'm just going to sell that. Okay, so now we are short 750 GRT tokens. And I also bought 750 GRT tokens on the spot side. So if we go to my wallet right here, you can see that I have a position of 750 GRT, worth $100. And I also have in my balances 750 GRT tokens. Now you can in fact leverage this up. So I can buy more of the GRT token on leverage, on a margin. So I can hit margin here and I will buy, I don't know, let's say 500. Or, we'll do another 750. So we're going to buy that right here. Place that order. All right, we bought more of the token. Now we can go to the GRT perpetual and actually sell more of that contract. I'm going to hit market order because I don't want to wait for anything. So you're going to sell this. And you can see right now we have a position of 1,500. So if we go to our wallet right now, you can see we have a position of $204. And in our balance, we also have 1,500 GRT tokens spot. Now, I paid a little bit in fees here. So this is why it's less than $100. This number might fluctuate as well, depending on the difference between the spot and the perpetual. But in general, this will stay about the same. And at the moment, I'll be getting paid funding rates every hour. So we look at GRT, it's paying 36% every hour. I have a position of $204. So if we go to the calculator right here, that is $73 per year, which is 20 cents per day. And yeah, almost like 1 cent per hour. I know that doesn't sound much, but we are getting a $70 return on a $100 investment, which gives you an effective APR of 73%. And you can leverage this up even higher. So I could buy another 750 and short another 750, effectively giving me an APR of 109%. Now, I'm not too worried about getting liquidated because right here, you can see my liquidation price is 60 cents. The mark price is 13 cents. But the higher this price goes, the more my spot holdings will be worth. So basically, that will lift my liquidation price as well. So this way, you're always balanced and you don't really have to worry about liquidations or whatever. The only thing to be aware of is that GRT has a 90% collateral rate, as you can see right here. So you really want to watch out if you want to leverage up higher than I am right now. And right now my leverage is about 4, and I don't really have to worry about this right now. But if you try and leverage this up to, I don't know, 15x, you might have to watch out a little bit more in case the fluctuations between the perpetual and the spot go crazy out of hand, you know? That's the only way you might get liquidated here. But basically, if you stick to, I don't know, a 4, 5, 6x leverage, you don't have to worry about this stuff. Okay, let me go back to my drawing real quick. Why is this not working? There we go. So essentially what I did was I bought 1500 GRT spot, and I also shorted 1500 GRT in the perpetual. So if my perpetual will go down in value, it means that my spot holdings will increase in value. And they both cancel each other out. So basically, this is a perfectly delta neutral position. You don't have to worry about anything. You can also do this the other way around. So right here, again, I am short on the perpetual and I bought the spot to be long. You can also long the perpetual and be short on the spot. And I'm not going to go into this too much, but you can sell the spot on margin, which essentially means you are short. And I can show you right here, I have a position in BNB. Right here, I am long on the perpetual and I am short on the spot because I sold the BNB on margin. Now, by doing this, it means you are essentially borrowing BNB. So you do want to be aware of that. FTX Premium also has a beautiful lending tab where you can see how much it costs to borrow all the different coins. If we look at BNB right here, BNB costs 6% to borrow. So essentially by selling on margin, you are borrowing BNB and then selling it back. And that's going to cost you 6% APR because you have to pay back that BNB at some point. But, you know, for me, that's pretty much worth it because if you look at BNB on the funding rates, where is BNB on the funding? You can see BNB is paying me 183% APR to go long, which is a crazy number. So I'm getting 183% on my long position. And if we just look at that real quick, you see I have a position of 12,000. So 12,000 times 183, which means 21,000 on an annual basis. My starting amount was only $5,000. And this is possible because I used leverage. I am leveraged in this position. You can see right here, I have a leverage of almost 5. Again, it doesn't really matter at this point because if you look at my liquidation price, it says infinity right here. And that is, again, just because the profit or loss of the perpetual is balanced out by the profit and loss on the spot right here. So if you take the calculator, it's going to get crazy because I'm basically getting this amount on an annual basis only with a $5,000 investment. And that gives you a effective APR of 439%. And that is a crazy, crazy number. Now, of course, this is not going to stay like this forever. You see it's already dropped, but over the past, I don't know, 3 days, this averaged to be 30%. So even still, you know, I would get 30% on 12,000, which is 3,600, giving me an effective APR of 72% on my BNB position. Now, once the market changes sentiment and, you know, we go bullish again, I'll just close out my position with a small profit and I'll look for the next opportunity. I hope that is kind of clear. I know it's a lot to take in at first, but I just wanted to give you kind of the basics of what I'm doing. And there's so many opportunities to do this. You don't have to be limited to FTX. I just like using FTX because of their collateral system, but you can do this on every exchange basically. There's a lot of information about basis trades and delta neutral in general. So if you are interested in this, I would highly suggest to do some more research. And if you want to start doing this, practice small, you know, start taking $100 and practice with that first before you get into bigger positions. I hope everyone will survive the bear market and, you know, stay safe. And I'll see you in the next video.